Eagle. Eagle Cement has actually broken out of a pattern not too long ago, and that should be able to work up better tidings for the stock into the short term. I will draw out the particular pattern that it broke out of so that it's a bit more evident for you, and you can see the breakout taking place from about this little triangular range. And now prices have actually come closer to where the supportive area should be. So somewhere at where this should be, all the way up maybe to about 1540, this area right here, should be able to produce enough supportive interest to carry the stock over. And if it can do that successfully, that might be a potential buy-in range for you. It's not too far away, so you might really want to keep your eye on this stock momentarily while this reaction is taking place. By all hands, this should be able to work up a little better as that supportive interest starts to show. So keep yourself very much glued onto activity here. We do hope that the next potential rally for Eagle may be able to carry it back at its previous high, which is closer to about 1650. All right, let's have a look at CHP. Now, this stock has also been in a downtrend for quite some time, although we did see a nice recovery in the last month or so. Now, I think the potential for this to be able to continue on with its recovery is more likely still in place, but it is just also a little needy of this little bit of a reaction. I think I'd be waiting for a potential support structure here at 226. It almost hit that earlier on today, and so you might want to keep your eye glued on to this. MACD readings are still on rally mode as well, and so I think that the fullness of the rally is still not done here. A potential recovery run could actually take it all the way back to about 2 pesos and 75 cents. So again, you might want to range trade this for a while the recovery is also in session. Cebu Air. Now, Cebu Air has actually done its reversal quite well. I think what helped over here is the fallback in oil prices in New York. And although there was a bit of a rally that we've seen recently in oil, it didn't seem to affect Cebu Air too much in terms of pulling its weight in. However, climbing from the low that it had sometime at 61 pesos all the way to where it is now at about 83 looks like it's a bit stretched. You can see the RSI readings right now are a little over 70%, and that calls in an overbought structure. Usually stocks like this need to slow down or prepare a little bit of a pattern before continuing on. So there might be a little bit of elevated risk right now if you're looking to buy this. I would look at potential pullbacks into the range. Right now, 75 or 76 might be areas that you want to look at for potential buy-ins. Let's begin with Ayala Land. Now, Ayala Land has been recovering since we saw the base form in November. So far, prices have been quite stable in their movement, but we feel some resistance is going to be felt at about closer to 45 pesos. Now, it might be nice for prices to be able to show some degree of a pullback as of the moment. And if we can see a worthy pullback to the level of support, maybe closer to 42, then it might bring on a much better opportunity to be able to buy. But right now, I'd be holding my position for Ayala Land because I don't see anything structurally wrong with the ability for it to continue on, other than it might just pull back slightly. But for those who have not bought it yet, you might want to wait over till about the pullback closer to 42, maybe even 41.70. We can already see some momentum readings showing some degree of slowdown, so there's no need to be too aggressive in picking this up right now. Let's look at Megaworld. The Megaworld has had a very good run. Since breaking off from its resistance area closer to about 5 pesos per share, we've seen Megaworld come up and strike itself up very, very strongly. It actually hit an overbought condition, and that might be able to pose some short-term problems for the meantime. So it would be nice to see Megaworld try to be able to pull back closer to the breakout point, which is closer to about 5 pesos per share, and that should be able to give investors a new window to be able to buy these shares back. Now, I also like to look at the longer-term picture on Megaworld because it does have a previous high sitting closer to about 580, and this may pose as major resistance for the medium term. Just keep an eye on that in case you want to do some profit taking if we do see prices manage to be able to escalate towards that area. SM Prime. Now, SM Prime has actually also done well. I mean, after its lows in November, the stock rallied back to almost 40 pesos per share, and we've actually been seeing quite a hefty amount of volatility recently. Now, volatility after an extended advance is not a good sign, because when you get very heavy pullbacks like that, that means that the market is getting vulnerable to profit taking. So whenever you see heavy volatility, either in major lows and major highs, it's telling you that the possibility of a trend shift taking place. And so when you see this particular type of movement, especially very dicey movements like this in SM Prime, my initial instinct is to take a little bit of profits first, because there could be more reaction time necessary for this. Support for SM Prime is closer to about 36, maybe all the way up to 35.80. So those areas might be more preferential areas for you to look for potential buy-ins to SM Prime. But looking at the big picture, if I may just look very much down the road here, you would see that SM Prime is standing at almost 3 highs it had there in the past, and because of that, I would anticipate this to be very heavy levels of resistance. And hopefully one day this particular high range will break out, but until that time I will be range trading this and also contributing to the fact that some profit taking may be necessary.